Hey, what's going on, everybody? Hope you're doing fantastic today on this, I'd say, fair-weathered Saturday. Of course, today is, April 13th, 2019, foul year of our Lord. So a full disclaimer, guys. Unfortunately, we're not going to be able to do the live stream, obviously, tonight. That's why you're watching this pre-recorded video. And here's the straight facts. We've been attempting to resolve this issue with our internet service provider for quite some time. This has been an ongoing issue. Sometimes it's great. Very rarely is it bad, but unfortunately at the level of production that we are performing at currently, we're just not able to deal with sometimes not okay. So as you guys know, last week we did contact the only other provider in our area for them to come out and run fiber to our to the place where I record from, to my office. Now, this was a costly expenditure, but well worth it because, again, I take this seriously. I'm here every day for you individuals, just as you're here every day for me. So I appreciate the continued support. I take this very seriously. So beginning Wednesday, we will begin resuming the regular live streams. Could we have a live stream prior to that, an impromptu, hey, guess what, guys, amazing? We could. It just depends on the service that we receive from our regular internet service provider. However, that fiber will be installed by Wednesday. I won't be able to do the show on Tuesday anyways, due to some personal family medical things that I do have going on that I've made arrangements for. However, Wednesday, we should be up, live, and broadcasting with the same quality and the same technical analysis that you guys have come to know and love. And we will be here for you guys. If you have any questions, of course, we're going to continue to be active in our Discord as we always are. So if you have any questions or comments, please leave them in the section down below. I will do my best to address them during the next show that I'll do. But until then, I will be still coming to you with our daily shows. They will be pre-recorded, so we won't have the community engagement that we typically have, and that is honestly one of the best parts of these shows, and really one of the great reasons that I started doing the show in the first place. But we will be back to doing the live streams Wednesday. So thank you so much for your patience. And to show that appreciation, let's break down some technical analysis for you guys. Let's go take a look at the markets. Honestly, in my opinion, nothing's changed for the long-term perspective. I'll continue to break down my positions as I talked about yesterday, and I'll continue to tell you where the important levels are that you should be looking to go long or where you should looking to be going short from. And we'll also have a brief dive into what should you be doing during the weekends. Do you go out? Obviously, you can take this time to spend time with your family. I love to spend time with my family on the weekends, to develop your social life, to network, just to enjoy your life as a trader, because it can be a stressful and hectic occupation. Typically, the weekends are more bullish than bearish. They're filled with the retail traders that aren't able to trade Monday through Friday, and they're really looking for a sustained movement. We did see a little bit of a deviation in the market over the last few months where we did get significant movements on Saturday. We're not obviously seeing that today, and we're kind of past that time where that would generally happen. So looking for continued consolidation throughout the day. There have been maybe two decent intraday scalps. Obviously, we've just been focusing on a long-term positional short, and I've already taken profits on the long-term scalp that we pointed out 2 days ago. That bid, setting resting bids between 49.30 and 49.50. Great trade, great opportunity, and getting our bids filled at 51.30 was a great opportune trade. The good counter trade scalp on our alternative account for BitMEX as we continue to take the positional short to the downside. So we're going to break those levels down. Hopefully you guys watched yesterday's video where I explained the psychology behind why we do have to initially reject from the 6,000 region to hopefully help you understand why I'm in the situation that I'm in. I'm going to break down another technical reason why we do need to retest the breakout zone at the very least around the $4,000 area, and why. And I can't give you although I went over the technical reasons why we will likely go lower than that, I'll point out that an additional technical reason why we do at least need to retest that zone based on inefficiency in the market. Again, if you missed yesterday's video, go check out yesterday's pre-record, and you'll be able to see me break down the psychology of individuals that actually have enough capital to move the cryptocurrency market, the total market cap, and Bitcoin in particular, and why they will be exiting the market on the first significant retest of the $6,000 floor that was previous support and is now currently the ceiling overhead resistance. So with that being said, guys, let's head to the charts. So let's look at the technicals. we can see right now that on the weekly time frame, we're going to be looking at the Bitstamp chart today. So I do like to mix this up for you guys so you guys can get a good feel, not only for our long-term levels, but also for the actual tradable levels on BitMEX as well, because we do see a slight divergence. That's why I recommend in advance using the Tensor Charts order books or an alternative form of lower time frame technical analysis, using those lower time frames to help refine your higher time frame levels. But if you start on the lower time frames and work your way up to develop your critical levels, you're going to have a bad time. So looking at the weekly chart, we do see continuing the weekly 100 exponential moving average and the weekly 55 exponential moving average continuing to act as overhead resistance on the weekly time frame. Now, I do want to point out the significance of this doji structure, the current candlestick formation that we have at the top of an uptrend. We have the weekly candle closing tomorrow evening, so it is time for us to analyze it. Again, as I've said before, whenever you're using any technical system or you're going to look at candlestick analysis or the effect that OHLC, which is open, high, low, close, has on your technical indicators, you need to look at a candle very close to when it closes. If you try to look at a fresh candle, so if you try to look at an hourly candle within the first 5 or 10 minutes that it's opened up, it's not going to give you, through a back-tested if this then that strategy or any technical strategy, good results. You have to wait until a candle is just about to close. That's why when I trade the daily candles, I trade between 6 and 7 p.m. my time, because the daily candle closes at 7 p.m. So when there's only an hour left, and even better, only a half hour left of the daily candle, I have about all the data that I need for that day's trading activity. And I can now use the new readings from my technical indicators and from the candlestick analysis that I can do on that candle to further benefit my technical strategy. Now, what is the significance of this doji candle, of this weekly doji? Well, it represents instability and indecision in the market. Prior to this, if we look closely here, prior to this weekly candle right here, every weekly candle looked quite bullish and represented on their lows amazing buy the pullback opportunities. However, what this candle would do to the psychology of investors is let them know that we are at a turning point. This was significant selling and the first bearish Heikin-Ashi candle that we have seen pretty much during the entire uptrend, the entire movement to the upside here. Up until this, it's pretty much been exuberant buying and disbelief that we'd go lower. However, now that we've printed this candle, and unless a dramatic change occurs over the next 24 hours, we will close this candle in a weekly formation, in a weekly structure. Now, what that means is that psychologically positioned buyers, whose only role in the market now is as a potential seller, it means they're feeling indecisive. Now, of course, they're hoping and wishing for a continued rally to the upside, but trading on the institutional level is no different a game of follow the leader than trading on the retail level. Position buyers have seen a large swath of profit taking and a huge gouge taken out of the total crypto market cap. Those who haven't sold yet are asking themselves, did I miss the top? Should I just sell now? I mean, I really hope we go higher and things seem bullish, but I don't know. This is a psychological event that I call confidence loss. Now, what I mean here by confidence loss is slightly different than when I refer to it in the realm of retail traders' psychology. For a retail trader, confidence loss is when he or she loses faith in their technical strategy. This occurs for a number of reasons. And in the best case scenario, it follows a string of losing trades following a well-disciplined and back-tested technical strategy. Now, that's the best case scenario. And the reason I say that is because more often than not, most retail traders never adopt a well-disciplined, back-tested technical strategy. So they're half-assed following a technical strategy. You know, they've chose their indicators, they've chosen their entry and exit signals, but in general, they choose to follow their feelings. They follow the signals that their system gives them based on how they feel about the system at any given point in time. You know, they'll get a buy signal when the market is moving down and second guess their strategy and choose not to take that buy signal, and then price will start appreciating, and then they'll try to grab at the trade when price is already, you know, at a higher level, you know, only to enter right at a local top, and then, you know, price retraces back to support, they sell on that retracement, and then they miss the real movement. It just happens over and over and over again to most retail traders that choose to based off subjectivity and not an if this then that strategy. If you devise a strategy and you know it to be profitable, you take every signal, even if it's a losing trade. That's the point of a system. Takes all the guesswork out, man. That's the point. You know, there are so many ways that I could give examples where not following your system and following your feelings instead lead you into a lot of trouble. And the entire reason, as I said, for developing this, if this then that strategy is in the first place is to remove all guesswork from your trading. Technical analysis is often referred to as advanced guesswork or subjective. And the way that it is used by most retail traders, those definitions do become accurate. However, as a professional trader, technical analysis is only useful, or I should say most useful, for an if this, then that strategy. I know I hammer this concept all the time, but that's because most traders come into my mentorship program because they've generally incurred a significant loss or they want to do better in the market. And when I ask them, what is your strategy? What I get back 9 out of 10 times is a word salad of subjectivity. Well, I use this indicator to give me a general idea of this and that. And sometimes when these lines cross, it's a good signal. And this thing over here, you know, sometimes I look at it. Just look into your own conversations. Is that how you respond when people ask you what your trading strategy is? If so, are you on average at the end of the year making money or losing money? What level of confidence do you have in yourself as a trader? I would go out on a limb here with my answers. If your responses to what does your strategy look like, if they're similar to what I just caricatured there. So anyways, getting back into an investor's loss of confidence, this refers to large position holders. So traders in the market that have capital and position holdings to move the market significantly should they make a move. So people with a lot of Bitcoin that when they sell are going to move the market, and people with a lot of capital that if they buy or buy back, they're going to significantly move the market. I'm talking about their confidence in their already in the positions that they're already in. Their position settles. They're holding on because there's a part of them that feels that their original investment thesis is still intact. And in the case of Bitcoin, that means that price will continue to push higher. However, they've seen other larger positions exit the market. We hadn't really seen that during this uptrend until now, not on the weekly time frame. As I said, this is significant selling that permabulls will have to contend with. Again, refer to my video yesterday if you haven't already seen it for my explanation of why we physically have to reject, more psychologically, but in general physically, have to reject from the initial test of the $6,000 zone when we reach it. Not if, but when. So let's cage everything that we discussed today with that notion, an investor's loss of confidence. So we have talked about the purpose of drawing lines on your chart. They're not there to tell you where price will go. They're there to tell you where to set limit orders. Whether that ends up being a long-term bottom or top depends on the market activity that follows that test of that level. However, I have found that using these higher time frame levels to guide my limit buys and limit sells is a good system. It's not the only part of my strategy. I don't reveal my full strategy. It's taken me a long time to develop it. The purpose of this channel is to help you develop your strategy that I hope is as good or better than mine. And I closely work with all the members of the premium group to help them develop their own if this then that strategy. Now, let's see here. Now, there are better ways to guide your limit buys and sells than just using higher time frame levels that I talk about here. But this strategy is a damn good one. And as I've said many times, damn good is better than not good. Now, where have we rejected from? 5,500. Is $5,500 the area where I said I would stop looking for long trades? No. Where was that area? That area is 5,780. The current ceiling of Bitcoin's price is 6,153. As we can see right here. We have 55, sorry, let's zoom out here a little bit. We have 5780, current level of resistance on my chart. And then we have 6153. You can see the difference between the dotted and the solid. Dotted means weaker. It means a different thing in my analysis, in my legend key. And solid lines mean significant levels of resistance. So also on the way down, you can see dotted green lines. This blue line is going to represent a take profit on a short. But dotted lines or dashed lines represent areas where limit buys can be set for scalp trades in a counter direction. Solid green lines represent areas of significant support. Let's see here. Okay, the current ceiling of Bitcoin's price being 6153. This is the zone between 5780 and 6153. That is the zone where I only begin looking for short orders because I fully believe that we will retest 4,000 after initially testing 6,000. Firmly believe that for the reasons I laid out in yesterday's video. So I will make it very clear that there is a possibility that we do continue to push higher from here. I don't see it right now. We again have that steep investors a loss of confidence to get over. However, it would only take a few large buyers to restore that confidence and set price up for a third wave, which would be that test of 6,000. I'm going to talk about that more in just a few seconds. I do believe that the strongest case right now and the most likely scenario is consolidation. After a large indecision candle like that, typically almost always we get sideways movement for a prolonged period of time. Then as price action develops, we can begin to see if price is going to be moving into, or if price is developing in a reaccumulation pattern for a run to 6,000 or distributing, and we're heading back down now. Now, ranges are beautiful. And this is what I'm talking about. We're going to be range trading. And while most people are scared of ranges because they get whipsawed, that's because they're trying to use trend trading indicators. You need to know when to switch, right? And some people are going to say, well, you never know when price is going to range, price is going to trend. You have a pretty good idea if you look for significant volume movements in the market, right? So what follows significant volume movements, right? Ranging activity, right? After a long uptrend and you get a large sell activity, you typically see sideways consolidation and then the beginning of a powerful downtrend. Or reaccumulation and price continues to trend to the upside, right? It doesn't take a whole lot of time. That's the only situation where if we break this level, we're bullish. If we break this level, we're bearish. That's when that can play out, right? Not every time you have a range, right? Because there are many times that you have a range where again, like I said, trading a range is beautiful if you have the right technical strategy because you only break out of a range one time. You only break out or break down one time. And the rest of the time, you buy oversold and you sell overbought. You set your bids below range lows and look to take advantage of liquidity grabs. And you look to set your asks above range highs and look to take advantage of liquidity grabs. I'm specifically talking about the perpetual swap contracts and futures contracts on BitMEX right now and other futures platforms. However, this is also true on your larger cap coins as well, but more poignantly on our futures platforms. Let's see here. Ranges are beautiful, man. And while most people are scared of them, they're my favorite trading zone. Liquidity pools become very evident. Where I want to set my bids and my asks in advance become very evident. Time transformation works amazing, and we're able to catch tops and bottoms all day long. Now, let's go down to the 3-day chart and start refining our levels just a little bit more. Looking to the 3-day, this is the most tradable higher time frame that I've ever encountered and that I do look at every time that the 3-day candle closes. Now we have confluence here again with our 3-day 200 exponential moving average and our 55 weekly exponential moving average. What is the 3-day doing right now? Well, as I said, looking at the current 3-day is useless because it just opened last night. It's not going to be valid looking at it in the light of price action as the candle hasn't closed and its fresh activity is going to give inaccurate reads on our indicators until it closes. So let's look at this 3-day close that occurred last night. Again, it's the first bearish Heikinashi 3-day candle that we've seen in a while. Closing basis was being suppressed by our 3-day 100 exponential moving average that we can see right here until we traded above it, as we can see right here, just before getting rejected from the 200 exponential moving average. Now, price is back testing that area right now. As I said, I didn't want to look at the current 3-day candle, but I would be remiss if I didn't point it out. Price is currently back testing that area to confirm another support resistance flip. Overall, price is consolidating between these two critical higher time frame levels, the 3-day 100 exponential moving average and our weekly horizontal level of previous liquidity, which is right here. So 51.10 to 49.79. We look closely here at WADA ATAR. What is the 3-day doing? Which it's been doing for a while. The 3-day WADA ATAR continues to wane, and it's going to be difficult to see. So just look up top here at our time transformation. Actually, you can see that clearly right there. You can see our 3-day. For the first time, we are flashing our 3-day time transformation sell signal for the first time since December of 2017. Now, we've already tested our horizontal, again, that level that I just pointed out, the dotted horizontal right there, for filling bids. Again, what is the purpose of having those lines on your chart? For filling bids, all right? That's the purpose of them. And we talked about that level in the video from 2 days ago. We used the order book from Tensor Charts to refine that level down to 49.30, 49.50. Got filled beautifully. That trade worked out like butter. The next area to set resting bids would be our 3-day key June in the realm of 48.33, right here. Again, as I said earlier, refer to your Tensor Charts order book or lower time frames to refine those levels a bit for greater accuracy. We have another long scalp set up at 47.63. That's our 3-day 8 exponential moving average, and 46.06, which is the previous weekly horizontal that I've been talking about for some time right here. All right. So looking for significant levels of support, however, our eyes are drawn down to our 3-day Tenkan that is forming a nice cluster right here. 3-day Tenkan coming in right around here. It's forming a nice cluster with our 3-day 55 exponential moving average and our 3-day 13 exponential moving average. You don't often hear me talk about the 13, but it just came up where it came up, and it would be remiss of me if I didn't point it out. I think we'll see consolidation there and a slowdown of the bleeding at that level. Going down to our daily now. Let's go down to the daily. This is going to be important. We can see the next significant daily level is also that 46.06 zone, where we have our daily Tenkan and our daily 200 exponential moving average. Now, here on the daily, we can present the argument for bullishness, okay? We have a bearish order block and an inefficiency in the market. So as we can see right here, I've charted the bearish order block right here. And as you can see on this daily candle, an inefficiency in the market. Inefficiency in the market being a large candle that rips through a lot of orders without natural growth and progression. Typically, just like gaps on a futures chart, the market does not like that. The market likes to backtest those areas and confirm them as weakness before moving down. Whether that happens immediately or very quickly doesn't really matter. The point is that when price retraces to those levels, anybody that was trapped as a buyer at those levels is going to take the opportunity to sell. Conversely, sellers to buy if we're talking about bullishness. All right. As I talked about, asks on our 49.50 bids that we filled could be set at 51.50 after already taking some profit at 51.30. I do expect us to retest this inefficiency in the market before heading down. You can see the bearish daily block right here. What would be our first target? The swing low right here. Swing low that helped form this bearish order block. So we're looking for the lowest swing low that formed before a bearish order block and a shift in market structure occurs. Okay. The next targets following that. So just for clarity, that's 47.79. If you wanted to be more conservative, you can target this swing low right here, 49.17. What's the actual low of that candle? 49.12, excuse me. Would be good initial take profit targets. I go over this in more detail for the premium subscribers. So let's see here. And just to finish up here, to simplify, your long scalp can still be in play. The bid that we filled at 49.50 can still be in play. In the group, the partial profits we already took at 51.30, looking to exit fully around 51.50 to 5200. But once we hit that bearish order block, the best risk to reward is in the short trade. Again, we don't have to risk much on that trade to be invalidated. If we are invalidated, that is another break in market structure, and pullbacks into the OB can then be bought. So breaking this to the upside, then pullbacks can be bought. It's still too early to tell. It's not as simple as if we break resistance, we're going to the moon. However, initially, I would expect that breaking that bearish order block after such a significant weekly candle would mean that the bulls can't be stopped right now at these levels, and that it would take the immense market pressure of selling that will come in at the $6,100 levels to quash price more significantly. Now, we're going to diverge today during this pre-recorded to not break down the extremely low time frame structures of Bitcoin on BitMEX as we normally do. The reason why for that is because the previous call is still in play. So there are lots of opportunities. There's been maybe 2 potential trades that you could have taken today. But I think that the more profitable are in the swing trades at this point in time right now. Looking at total crypto market cap, we can find further argumentation or further confluence for our position to the downside or for our retest to the downside. The reason why, obviously, is just rejection after our initial retest of resistance. If we look at the total market cap on the daily, we can see that we did form a nice range high. We did wick directly above that, tapping in the liquidity and pushing our way to the downside. Currently backtesting that weekly level of horizontal support and resistance that we did chart out here. Currently backtesting it for an SR flip. And again, broadly speaking, I'm looking for that retest of our inefficiency in the market at the very minimum before we can see a local bottom form. 151 to 145 billion on the total market cap. Looking at the altcoin market cap, we see a very similar structure. We did get some nice bullish activity over the last couple of days in the intraday, giving you, as I said, a good opportunity to exit out of your positions at less of a loss if you got trapped in some altcoin positions, or at break even, which I think is the best case scenario. There are, again, as with any market decline, there are going to be a few that outperform the market. But right now, the entire market is suffering. So I'd be very careful with your altcoin positions and be looking to definitely trade with a well-respected stop loss. This is really not an opportunity in my mind where you want to be scaling down into your positions, because I do think that the market takes, as I've talked about here at length now in this video. Let's go take a look at a few other data metrics here. We're going to go look at USDT Tether dominance. Tether dominance continues to rise. Now, we did form an inefficiency in the market here. We did gap. I would expect this gap to be filled, so I would expect Tether dominance to fall off a little bit. I think that you are still going to have opportunities because, again, what is the strongest case right now? Consolidation. In consolidation, things are going to range high and range low. So if you have not taken this opportunity to exit out of your trapped altcoin positions, you're still going to get another chance. Why? Because Tether dominance is likely to drop from here and revisit this gap area where we close here and we open here. So I think that we are likely to fill that gap. And also you can see that USDT Tether dominance is at resistance. So just a realistic place to look for a healthy pullback in Tether dominance before we continue to the upside. The daily is not overbought yet. We did actually get a very nice, beautiful buy signal right here on this candle right here. Tether dominance telling you to be out of the altcoin marketplace. Again, I don't hear anybody else talking about this chart, but it's one of the most important to talk about. Looking at Bitcoin dominance, what do we see? We broke cleanly. We broke out of that descending triangle. We need to pull back and back test this level to make sure that it is going to be confirmed. This is another bearish indicator for the altcoins. Remember, we were potentially bullish on the altcoins while we were consolidating in this descending triangle, but no longer, guys, especially with the total crypto market cap and the other crypto market cap, excluding Bitcoin, putting in its technical behavior right now. You have to be very, very careful about the altcoin positions that you put on. I still think that we have yet to see a surge through some of the low sat coins. So we're talking about things like PoonDX. We're talking about things like Holochain. We're talking about anything like Poet, for example, Poe. There are going to be your low sat coins that typically do perform well in this market behavior. Coins like that typically get capital flown into them. Again, there is another, in particular, large cap altcoin that I am very bullish on right now. For very good technical reasons. I'm going to keep that for the premium members right now. They're well aware of what it is. Once that puts on some bullish activity and behavior, I will likely talk about it here in the show as well. Looking at Bitcoin volatility over the last 24 hours, we can see it on, or really over the last few days, has been on the decline after that big, nice jump up after April 1st. Just been on the decline, and obviously been able to catch trades a lot better with volatility dropping. Looking at CME futures, we can see that the gap that was caused right here has been back tested and filled. We are now currently consolidating and closing above that level right here, forming a doji candle at the bottom of a downtrend. Again, an indecision candle on the daily here for CME futures. We'll see how this closes. Or excuse me, not see how this closes. We'll see how it opens. But now that the gap has been filled, as I said, I think this leads confluence to the fact that I do see that bearish order block get tested. We can see the bearish order block right here on the CME futures as well. I do expect us to test that and that to be the optimum level for shorting if you miss the short entry on the local top. Looking at GBTC, GBTC has a little bit of ways to go down to finish closing the gap. We have the gap down here, so I would expect GBTC to continue on the decline a little bit. I expect this to go down as the rest of the market continues to move sideways in its level of consolidation. I do want to take this opportunity, since we're not doing the live stream, to engage with some of the YouTube comments, so I apologize if this is a little boring for you, but if you guys want to listen up for the YouTube comments that I'm going to talk about, and then we're going to talk about some exciting stuff here in just a few minutes. Mr. Ether did comment, that is $1 million bit of advice, price disrespecting a certain level. I hope everyone really pays attention in every video. Thank you so much, my man. It's good to see you in here. I always appreciate your support. You're one of the good ones and one of our longest supporters, man. Thank you. K7 Jixer, I approve of that. You're fine to have that link in there, man. It's all good. Bob the Builder says, sorry about the ISP issues, but thank you for the upload, Justin. You're very welcome, Paul. Thank you so much. K7 Jixer says, order book trading can help gauge where to place an order to catch a wick in either direction. Absolutely. That's why tensor charts is such a powerful tool. Kukakula says, would love if you can change your chart colors. It's not a good contrast. It's hard to see. So again, that's something that that I've gone through. I know that I've gotten some responses like that, but overall, like strategically, this is the best contrast for individuals who are hard of eyesight to see. I know when I zoom out, sometimes it can be more difficult, but having them in red and green wouldn't make that any better. So for example, like when we get really zoomed out like that, like, yeah, it does become difficult to see. But when you zoom in, this actually does look much cleaner and much better than red and green. It's something that I continue to question. This is how I trade. This is my setup because it's very calming to me. I like the blue calming. It, white and black candlesticks, they keep me away from the emotional impulses of red and green, which are very emotionally charged colors. But I appreciate the comment, man, and I hope you keep coming back. And if you can think of anything, if you could show me some examples of something that might be better, I'd love to look at them, man. Thank you. Blockchain Gains asks, when fiber connection? As I said in the beginning of the video, we're going to be up and running by Wednesday, man. Thank you so much. Jürgen Ernst, much love, brother. Thank you so much, man. Turd Ferguson says, that was quite possibly the best straight, no-nonsense 45-minute video ever. Perfectly done, Justin. Much appreciated. Thank you, man. Much, much appreciated to you. Anamash and Hugo Chill chime in. Thank you guys so much for your support. Floyd, I digress. I do digress quite a lot, man. Brandon says the last 20 minutes was spot on. Great explanation of the core value of fundamentals. Thank you so much, man. Light Yagami says, stop with the thumbnails. You're a grown man. Hey, at the end of the day, YouTube is its own unique platform, and there just is... Scott's doing a great job with the thumbnails. I really like them. Here's the thing. There is just a certain thing that that YouTube likes to see. There are certain images and thumbnails that people do like to click on. And if you go take a look at our old thumbnails that were basically just random caps of me during a live stream, this is much, much better. So big shout out to Scott. He's doing a great job with the thumbnails, and I appreciate him from doing that. And I'm sorry you don't like him. I haven't seen you back in a while. Like, why don't you come in the live chat? It'd be good to chat with you. Anomaly123 says, great trading advice in every episode. Thank you so much. Exposed org. Sorry, man. Anonymous. That was tensorcharts.com that I was looking at. Tensorcharts.com. Pam Darian says, if you pizza when you should French fry, you're going to have a bad time. You're going to have a bad time. And Rick Deckard says, oh, this was on TD Sequential, but says, great video, man, thanks. I'm sure there's a lot more to it than this. Seems too simple, but looking forward to the more in-depth video. Got a lot of requests for that second TD Sequential video. It is on the docket. I've just been so busy. I did not expect the YouTube channel to take off like it did. And of course, we're trying to get every week, trying to get more in-depth with the premium subscribers. So thank you so much for your support, man. All right, guys, thank you so much for joining me today for the pre-recorded video. Again, very sorry about the interruption in our local service, but we will be back on Wednesday with our new fiber connection. Fingers crossed, everything's going to go fantastic. When bad things don't happen to us, only good things happen. So knock on wood. And again, thank you so much for the continued support. If this is your first time to the channel and you really appreciate and enjoy the content, because we are trying to express trading psychology, trading strategy, and discipline that I do not see on any other channel. It's all when moon, blah, 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 blah. And if you can see and spot the difference and are an individual that wants to improve your personal strategy with real, no-nonsense information, please, please, please subscribe to the channel. Hit that bell, because the YouTube algorithm doesn't really like cryptocurrency traders sometimes. And we'd highly appreciate it if you give the thumbs up button a little smash, guys. We're trying to hit 100 likes on every video minimum. And after that, we will most likely raise the minimum to 200. So highly appreciate anybody who's hitting that button. If you want to come over and support us on Twitch, it's twitch.crackingcryptocurrency.com. If you want to come over in there, give us a follow or a subscription. Of course, if you would like to be a member of the premium trading group and have access to our trade setups and signals, our private Discord community, my indicators and strategies, as well as our webinar course and the resource database library, you can, of course, check out the link at the top of the screen, premium.crackingcryptocurrency.com. I'd love to see you in the mentorship program and work more closely with you if you are an interested trader. Until then, guys, make sure that you're trading safely, and I will catch you guys in the next video.